What real estate company with a solid track record and unique business model is positioned to grow much higher this decade? Stick around to find out. Hey everyone, Stock Ninja here. This is episode 5 of Who Beat the S&P 500. Today's company was recommended to me by Jerry over at GW Life TV, a fantastic channel covering everything you need to know about ETFs. I have also linked the channel in the description below. Feel free to check it out. A 90s baby, today's company was founded in 1992. Had you invested $10,000 into this company exactly 20 years ago, with dividends reinvested, you would be sitting on a balance of $55,660.37, almost double the S&P 500's $31,067.82. That comes out to a total return of 456.82% at an average annual return of 8.96%, comfortably beating the S&P. So what is this company that we will be looking into today? They are called Equity Lifestyle Properties. For the first time in this series, we will cover a company in the Russell 1000, the Russell being the index for small cap companies. Trading with the ticker symbol ELS, Equity Lifestyle Properties is situated in the real estate sector, with a current market cap of around $12 billion. With dividends being one of the key metrics when people look at REITs, it is encouraging to note that ELS has raised their dividend for the last 15 years. ELS currently has a solid dividend yield of 2.12%, with an excellent 16.11% 10-year CAGR or compound annual growth rate. Now, when looking at the payout ratio, which sits at a decent 65.22%, I want to mention that the payout ratio for REITs are calculated differently, using the funds from operation or FFO as opposed to the traditional EPS or earnings per share. In the fiscal year 2019, ELS generated a record $1.04 billion in revenue, continuing a nice uptrend looking back over the last 5 years. ELS has a unique business model, focusing on owning and renting out the land to two main types of homes, RVs and manufactured homes. Most people are familiar with RVs, but manufactured homes are a bit different. They are assembled in a factory from where they are transported to their final destinations, which is pretty cool. Their business generates revenue in two main segments: the property operations segment, which owns and operates the land lease properties, and the home sales and rentals operations segment, which purchases, sells, and leases homes at these properties. Through their strong social media campaigns, ELS has stayed true to their core customer base of near retirement or in retirement age clients. ELS has a lot of prime real estate, with most of their land properties situated in locations all across North America, including 413 properties containing 156,655 different sites, with a focus on areas that retirees would find most desirable. Their purchases include favorable geographical areas such as lakes, rivers, or ocean frontage, along with several resorts. They also include a small portfolio of 11 marinas with 2,300 different sites. Now, let's see how the company fared in the dot-com bubble crash, the Great Financial Recession, and how it's currently trading during the downturn in 2020. Largely unaffected during the dot-com bubble crash, ELS only fell 20.04% compared to the SPY's 50.41%. ELS the clear winner here. When looking at the Great Financial Crisis, ELS fell more than the SPY at 62.19% compared to a close 57.61%, SPY edging out ELS here. During the current downturn in 2020, ELS fell sharper at 45.73% compared to the SPY's 35.59%. Though the S&P did perform better, it's worth bearing in mind that the real estate sector has been hit quite hard, similar to the last recession. Equity Lifestyle Properties is headquartered in Chicago, Illinois, with 4,200 employees all around North America. With 55% of all management positions being filled by women, including the position of CEO, Equity Lifestyle Properties has been led by Margaret M. Nader since February 2013. When looking at their stock appreciation since Nader took over, we can see a steady 270% gain. With a strong focus on the environment and workplace gender diversity, Equity Lifestyle Properties management team has been firing on all cylinders. Vanguard, owning a huge 14.3% stake, once again retains the top spot, with BlackRock miles behind at only 8.04%. FMR not far behind from BlackRock, with State Street at a distant fourth. Suffice to say, both Vanguard and BlackRock sure know how to pick their winners. In my opinion, Equity Lifestyle Properties is a company that sets itself apart from traditional REITs. Their unique business model of owning some very lucrative land and generating revenue through manufactured homes and RVs on top of it has clearly been working, as shown by their last 5 years of revenue uptick and stock appreciation. Add all that to their core customer group of aging baby boomers who will be well positioned financially at their age, and we have a solid company looking out at least till the next 10 years. Overall, a very interesting company. I thoroughly enjoyed looking into them myself and plan to own a few shares. As always guys, thanks for watching. Drop a comment below with your thoughts on Equity Lifestyle Properties. I'm curious as to what you all think. Please remember to like and subscribe. Till next time, Stock Ninja out. I am not a financial advisor, and this video is for educational purposes only. Please do your own research before buying or selling any stocks seen in this video. Thank you.